YouTube, it's Louis here. Hope you're well. We're looking at Quant today on the 4-hour time frame. If you remember in yesterday's update, we were saying that we were pulling back and we need to hold certain key fib levels. We were saying that as long as we're above 137, chances are we're still going to hit 161. So if we zoom out a little bit, we can see that this is a really large golden pocket. We're holding the 0.5, which is $145 as support over here, which is where we dumped from in yesterday, after yesterday's update. I think we were making the video up here. We started dumping and flipping that one fib level into support for now. You can actually see that this is lower than that. So right now, for me, it's looking like it's going to try and wipe this out. We have to wait and see if it can do so. If we're losing on the 4-hour time frame this wick, $145, then yeah, we're going to try and head back towards 137, 140. Again, hold above this golden zone, which with that green line, and we should actually continue up. So yes, in the short term, we could be coming down if we're losing the wick over here, the 20 and the wick, which is 145. And we could be coming down to as low as 137. Doesn't necessarily need to go to it, just that you need to hold above that if you want to continue onwards and upwards beyond 160. So I know we haven't tapped it yet. It looks like we did, but actually no, unfortunately we did not. The high was 159.84 cents, so literally 16 cents off $160. Let's say that it hit 160. So yeah, if you appreciated that, cool. From down here all the way up until 150 to 160, and if you took that, great. We might continue higher, but again, as in from here, but again, if we're losing 145, that's how we know, okay, in the short term we are coming back down, just looking for a higher low that is above 137 to then continue up to these targets. Remember, if you want to see 180 plus, 137 is the support we cannot lose. Now we'll go up to the daily time frame. I will get rid of this, but yeah, if we look to the left, it's tying in nicely with our double bottom target. So this would be the more conservative one, and this would be your more aggressive target. But yeah, for now I'll just get rid of this, but you can see some more confidence. And then when we move out to the daily time frame, we see that we're actually currently rejecting this golden pocket. So this was an area we were talking about down here. We were saying, yes, we can pump towards the golden pocket or even further to the 786, but one of these areas is going to be key resistance. We're just waiting for proof. We're waiting for rejection. So we didn't get any of that on the 0.5 fib, and as you can actually see, we haven't even got to the 618 at the moment. Currently, we are being rejected by this level over here. I've set an alert, so when we do cross this, yeah, it's just going to ping basically. And the reason why I'm looking at 160 is because in the past over here, when we were talking about this old Head and Shoulders back in 2021, I know a lot of you were here back then, so well done for sticking. A lot of you were haters. I remember so many of you haters, but eventually became supporters of the channel. Either way, 150 was the level we were all fighting over. I was constantly saying, if we lose it, we're screwed. We're going down 70. A lot of people were laughing because over here, we did actually get above 150. Here we didn't, but over here we did. So a lot of people were laughing. But we can actually see that we wicked off at 160. So going forward, I need to be super focused on this area if we're ever coming to it again in the future. And over here, we never did. Here we got a slight rejection, but where did you find support? On the inside. So this is an area, but it's also it's an area of resistance and support, but it's also within itself like a range of support and resistance. So yes, while we're below it, it's acting as resistance. If we push through the first level, now that's support, that is resistance. Hold it as resistance, back to support, and you'd be ranging essentially. So that's why over here you hit it as resistance, you came back for support, and then you bounced through. You see with this candle you actually went below, but did it close below? No, because that is support 150 and 160 over here. So that's why we're seeing, okay, we were literally 16 cents off 160. Let's just call it 160. On other exchanges it would have hit. So yeah, that's why it's pulling back, and it's trying to close below the 0.5 and 150. It did not close below either, but you can see today it's already trying overnight. And since the daily candle open, at first it was trying to go down, now it's reversing. So yeah, we need to, of course, see the weekly candle closer. Now let's zoom out, because again, guys, there's still a risk. I know we were talking about this shoulder, head and shoulder, and right here we invalidated it by, well, we never validated it basically. We invalidated the chance of breaking out. You see this shooting star is giving us the biggest of opportunities. Another reason, can you see the moving averages? Let me turn off the drawings. So can you see the moving averages, how they formed a bullish cross? See when they're both downward slanting and then they crossed over, that's a bearish cross. That's a bullish cross. So over here, when the orange goes over the purple, that's a bearish cross. So can you see how the orange was about to go over the purple? They're about to cross over in a bearish way. That's a bearish cross, but it invalidated itself. So we form a slingshot motion, and that would be us climbing back above it. So we had the bearish signal, and we were about to cross over. So if we had follow through, then the bearish cross would have happened, but we had a slingshot motion. Luckily enough, I gave you that small double bottom over here, which led us climbing back above the 200 moving average on the daily time frame, which was a confirmation statement. Now we're starting this daily uptrend, and yeah, we were just waiting for the neckline of this double bottom to be broken to head to our targets, and we're almost at those targets. It's just this is the golden pocket that could be signaling this is a dead cat bounce. A dead cat bounce can actually go beyond the 618 to the 786 and still end up continuing lower. So of course this would be that dead cat bounce scenario where you could go up to here and still continue lower, or head up to 786 and still continue lower. What I would be waiting for is a higher low. So of course wherever this tops out, there's going to be a 0.5 and 0.618 and a 786 fib, and if you just hold above that, we can actually break through. Of course, put in another lower high and we lose this, then yeah, we can actually head lower. You would simply wait for the loss of the double bottom, which is $100. So no loss of $100, we're not going down, simple. So even if we do this dead cat bounce over here, boom, we're all expecting that you can still just not lose that, put in a higher low randomly, and then continue onwards and upwards. So that's how we would create the reversal wave to continue bullish until a certain level. So you see where we rejected it once. I actually called for the dip exactly from that price all the way back down to here for your entry point. Yes, we went a little bit lower. We were waiting for $100 to be lost. Never lost them with that small double bottom, and this larger one started climbing back up. But yeah, could this be the rejection point? That's why we want to wait for that weekly candle close. Going to the weekly right now, we can see that, yeah, at the moment we're having a lot of momentum pushing into it. When is this going to die off? I'll update you guys tomorrow. Please do like, subscribe and comment. If you want to learn through the mentorship or the course, private message me on my Twitter and we'll get you started today, guys.